Welcome to Digital Ag Global, brought to you by Cultivate. I'm Clyde Graham, an agribusiness consultant from Keystown Solutions. I'm based in Ottawa, Canada. I spent the last 2 decades helping the agri-fertilizer industry navigate environmental, safety, tax, trade, transportation, and economic issues. Clearly, I am far from an expert in digital agriculture, but I'm here to ask some questions and keep the conversation moving. Today, we're talking money. Our guests are two leading investors in AgTech. Welcome to Chris Rawley, CEO of Harvest Returns out of Fort Worth, Texas, and Ben Williamson, Managing Director and co-founder of Grit Road Partners based in Omaha, Nebraska. Before I we allow Ben and Chris to introduce themselves, I'd like to turn it over to Yurii Kovalchuk, the president and CEO of Cultivate, to talk a little bit about himself, his company, and the topics we're going to be discussing today during the podcast. Go ahead, Yurii.
Thank you, Clyde. Guys, my name is Yurii Kovalchuk. I'm CEO and co-founder of Cultivate. As you guys know, we are an AgTech software development company that is helping businesses from agri-food value chain. And we are hosting this great podcast called Digital Ag Global. Today, we're gonna jump into investment world and we will talk more about current investment climate in digital ag and AgTech, and we'll see what are the challenges, what are the future trends, and how the situation with raising capital looks like right now. Before we move forward with the introduction of Chris and Ben, I just want to share a piece of exciting news with you. Guys, as a part of Digital Ag Global, we are starting to offer our sponsorship packages for companies who want to be a part of Digital Ag Global podcast, who like our content, who want to grow together, get access to our network and our ecosystem. If you want to learn more about those sponsorship packages, feel free to reach out or drop us a line via email, and we'll show you all the benefits we can provide for your ag businesses. With this said, let's move forward to our guests today, Ben and Chris.
Yeah, and before I do the introduction, I want to remind the audience that we would like this to be as interactive as possible. So in the chat, if you have any questions, any comments at all, please put them into the chat. We'll try and address them during the conversation. So please, we want your participation. Maybe we could start with Chris. Chris, you have a really interesting background and your journey into agri-tech investment. Maybe you talk a little bit about yourself and your company.
Hey, thanks, Clyde. Great to be here with everybody. My background is to get to investing in AgTech companies, and agriculture is probably non-traditional. I don't have a farming background. I do have spent a lot of time in the military, a lot of time traveling overseas with the Navy, and I was fortunate to see some really interesting places in the world. Many of them were involved in active conflicts, places like Iraq or Somalia, where there were food insecurity. And that was interesting to me, growing up in the suburbs of a big city in the United States, to see people that were very dependent upon agriculture. We all are dependent upon agriculture, but to bring it so closely, such an impact, to see that was pretty amazing. So also worked in technology, worked in investment, did a lot of different things, and decided I wanted to invest in a farm, and there weren't really any good ways to do it. So I kind of skipped a few steps this was in 2016, and we started Harvest Returns, and this is a company that allows people to invest in agriculture. And we started out with production agriculture back then, and then around 2020, 2021, we saw that there was a need to bring investor capital into the agriculture technology space. So we started doing that. And specifically in that space, we've done about 10 deals, roughly $4 million deployed into various types of digital agriculture and agriculture technology. So I've been doing that for a while now, and it's great to be here.
All right. Well, thanks a lot, Chris. Chris is all over YouTube, and I encourage people to look him up on YouTube. He's got some interesting stories to tell. Hey, Ben, maybe you could tell us about you and your company based in Omaha.
Yeah, absolutely. So I got into AgTech perhaps also sort of in a non-traditional manner. I actually was running a state venture fund effectively, and there's a bunch of these in the United States, probably a couple dozen now, where you have economic development programs coming from states that have been legislated to create really just net new jobs in that state. A lot of times they will have a pot of money for grants, for startups, for tech and innovation. And then often they'll have kind of a venture fund on the back end to help, once those companies commercialize, get to the next level, raise some money, encourage other investment into those companies, both from in-state and out of state. I was running that venture fund for the state of Nebraska. It's called Invest Nebraska. And a couple of years into that, we made sort of an obvious, I guess, realization that prompted us to dive into AgTech, which was back when we looked at this in 2018, the vast majority of entrepreneurs, but also investment capital into AgTech was coming from the traditional venture capital markets. So Silicon Valley, Boston, New York, some global international markets as well. There's nothing wrong with that, but we just made an observation that there should be more entrepreneurs and capital kind of in the middle part of the United States, proximate to agriculture. And so we did what any sort of good pseudo entrepreneurs do and say, let's try to solve that problem. We raised an $11 million AgTech focused fund called Grit Road Partners is the firm. Fund one was $11 million. We are now fully deployed on Fund one, and we'll be moving on to Fund two, but that's focused on investing in early stage AgTech. That could be primarily seed stage is what we say, but as most people know, that's sort of semantics depending on where you are in the world. So we'll look at pre-seed all the way up to kind of Series A, but that early stage to help companies get going.
So Ben, can you explain what Series A is, just for the audience?
Yeah, so I guess as mentioned, these titles are more about telling a story around momentum for the startup and for the entrepreneur than they are to tell you anything really meaningful about the fundraise. Again, it changes depending on industry, geography, all of those sorts of things. The way I think about the names is when you have a brand new company, you hopefully have maybe a prototype or an MVP, as it's called, and you might raise a little money to go test the market, to talk to customers and to get that out in the world. Oftentimes that money comes from angels, friends and family, sometimes these kind of other smaller investors and platforms. I view that as what I would call pre-seed capital. I call a seed round as kind of your first, this sounds bad and I don't mean it in that way, but first proper round of capital with institutional investors. Usually it's bigger dollars. And usually it's saying, hey, look, we have this market validation. This is starting to work. Now we need to raise some capital to go grow, as opposed to raise capital just to get off the ground or survive. And then the Series A is kind of the stereotypical stage when you're starting to find product market fit. Maybe you have some meaningful revenue. So hundreds of thousands of dollars of annual revenue, maybe $1 million of annual revenue or more. And now you're starting to actually have data around how your company is growing, how the product's going, how you're acquiring customers, that sort of thing. And you can raise a bigger round. In AgTech, the sizes change depending on sector, in my opinion. In AgTech, a seed round is kind of like $1 million to $2 million is kind of a seed round. Now, again, in Silicon Valley or a traditional venture market, that seems exceedingly small. But AgTech is sort of a nascent category.
Right. Chris, briefly, do you want to is there anything you'd like to add in that description there? Or
Yeah, I've been covered it very nicely, but the thing to think about is as these companies, from the back of a cocktail napkin idea to Series A, Series B, or continued growth in a company, there's a process of de-risking that goes on. So those first friends and family people, early stage, they're putting a lot at risk. They also have potentially some of the higher returns, but as you kind of move up, as the company grows and proves itself and proves its market, you're going to see less risk in those investments, but you'll also, those later investors are not going to get as high a potential return.
Right. So obviously none of this is for the faint of heart.
That's right.
I would agree with that. And AgTech is really interesting. It's a segment of the venture, the early stage investing category where a lot of people just don't understand it because as been said, Silicon Valley, most of those folks don't really have experience in it. So it doesn't match what we call pattern recognition. It doesn't match the patterns that they know. This is a company that looks like a software as a service company where it has very predictable sorts of growth multiples. AgTech is a lot different, and as we all know, probably everybody listening to this podcast knows that you're dealing with the speed of biology in agriculture, and that brings a lot of interesting and different types of risk.
Yeah, I think it'd be fair to say it's a long way from Palo Alto and Silicon Valley to Omaha and even Fort Worth in this area. So, we decided to take a look at this whole, relationship between finance and the people that are trying to get new products or services into the market. And so when it comes to startups, I think there was a reference that you made, Ben, to sort of the momentum of investment. And so, we had, I think, a bit of a boom, around 2020, and then a lot of things happened in the last few years, and there seems to be a reduction, perhaps, in the available capital in the space, or at least the lending that's going on. So is that a fair assessment of the market, Ben, where we are now, that perhaps we've lost a little bit of momentum in financing, and is that something that we're going to continue to see, or is it going to correct itself?
So yes and no. I think we have lost momentum in terms of venture capital. I don't think we've necessarily lost momentum AgTech relative to venture capital. And I'll explain what I mean by that. You're 100% correct. 2020, 2021 were the peak, the bubble of venture capital. And a couple things happened in that time period that caused that. One, money was free. Of course, rates were low. Everyone had cash, a lot of cash on balance, including agriculture balance sheets. You saw COVID sort of pull forward what I call pull forward entrepreneurs. So maybe there was a would-be entrepreneur that would have started a business in 2023, but COVID created this sort of existential crisis for all of us that pushed a lot of people over that proverbial entrepreneurial cliff and pulled deal flow forward. So there was more deal flow than is typical. And then the third thing, you also saw a boom of new venture funds. So a lot of it was easy to raise capital because of cash on balance sheets. So you saw a lot of venture funds that had money, dry powder that they had to deploy. So venture capital as a segment grew massively and had this bubble that kind of popped in November-ish of 2021. So we've seen a big sort of macro pullback on the investment ecosystem. But if you look at the data around AgTech as a percentage of venture capital, it's stayed pretty much the same. The numbers aren't great. They're very, very low. I think they should be much higher, but relative proportion is basically the same. So I would make the argument it's hard to raise capital for sure. It's hard to raise capital pretty much all the time and for pretty much every industry. I don't think it's necessarily harder in AgTech than other sectors, though it might sort of feel like it from a macro standpoint.
Chris, maybe I just turn over to you and provide your thoughts on that issue.
Yeah, we've seen very, very similar dynamics in the market for our investments. We have a pool of about 18,000 investors, and something that differentiates us from maybe the traditional venture capital market where you've got larger limited partners. For us, we have a crowd essentially. So we have investors maybe writing $10,000, $20,000 checks, even as low as $5,000 checks in these individual AgTech deals, and then we pool them together and invest. And we've seen for a lot of the reasons that Ben discussed there, a pullback in that interest. But for people may have heard, we had an election here just a little while ago in the United States, and we're expecting to see some major changes in a lot of different aspects of the economy, and I think we'll start to see the venture stage in agriculture technology in particular kind of come back into vogue with investors. And it's a really, a lot of people haven't invested in it because they don't understand it, or they just don't have exposure, whether you're a big LP in a venture fund or one of our investors. But so that's one of our jobs, and it's great to see, things like this where people can learn about a space that they may not have realized they can actually invest in and understand the impact that this makes on the food system, across the planet.
Sure. Well, Yurii, as a supplier to startups and agribusiness, agritech, how do you see this evolution going?
Well, I should agree with Ben and Chris. It's hard to raise capital, no matter if you're in fintech or agtech. It's still hard and challenging task. And due to the nature of our company, we talk a lot to founders and early stage startups. And raising pre-seed and seed round, it's, I guess, the first step to become some sort of success in the industry. And that's where early stage startups has a lot of, I would say, challenges. But from what we've seen specifically, I guess not specifically, but mostly in Europe, what I saw, very kind of early stage companies, they don't usually rely on this kind of 3Fs of investments. They go and find governmental grants or nonprofit grants where they can raise as low as 50K or 100K to get a POC or MVP going, and then go and raise a bit more actual seed round. So that's the case for early stage companies. For scale ups, kind of already on a go. I guess it's hard right now to raise Series B or Series C, but there are exceptions on the market. There is this company called X Farm Technologies. They're a Swiss company. They have operations in Italy, Germany, Spain, and they raised last month 36 million in their Series C. So I guess the finances, money is there, but it's harder to get them, and you need to be a better company and have a proof of what you're trying to achieve in order to secure those investments.
All right. So let's look at the future a little bit. I mean, I think Henry Kravis, who's a legendary deal maker in the United States, financier, he said it's one of the most important things at the end of the day, being able to say no to an investment. So is now a good time to say yes to investing in digital agriculture. Chris, why don't you start?
Yeah, I'd say so, Clyde. Not every company that starts is going to succeed. That's important to remember. Timing is as good now as any. As the demographics so we invest not only in agriculture technology but also in production agriculture, so we kind of see both sides of it. We see the farmer, the production side, and also the technology providers trying to provide to those producers. And for the most part, that's who are the customers of agriculture technology companies. Not entirely, but for the most part, you're talking about selling your product to farmers. And I will say, this is not necessarily a timing thing, but we see a lot of companies come to us. To hark back to the quote there about, is this saying yes and no to investments? We see a lot of companies that come to us and they define the problem, which is important, and then they create a solution, define a solution, and many times they've defined the problem correctly, like, hey, the problem here is something related to climate or something related to increasing yields or efficiency in ag production. And in ag tech, I think something that we see here, and I can't talk to the rest of the venture market or early stage market, but they have a solution that's excellent. At least maybe they've had some farmer trials. Maybe they've gotten some of those grants, government grants that Yurii spoke to, what we call non-dilutive capital, which is great. It's a really helpful thing for startups. But the government doesn't always grant those grants or make those investments on market-based conditions. They've got money to deploy and they deploy it. So we see companies that have what they think is a great solution, but it really doesn't commercialize, meaning there's not a demand for it for the farmers. So you may have the best product out there, but it simply is not attractive to farmers because it doesn't kind of scratch an itch that they need, or produce the kind of returns that they need to make that investment. And it is an investment for these companies to buy a new technology or a new product that maybe is untested on a large scale.
Right. So what I'm hearing from Chris, Ben, is that it's a great time to invest, but you got to invest in the right entrepreneurship, the right startups, and that's, I guess, the trick, right?
Yeah, sure. Yeah, I guess one to start, and maybe this is a message to the entrepreneurs listening. Listen to the framing of the question. Equity investors are looking for an excuse to say yes, right? You know, bankers and some other types of financing might be predisposed to look at the risks, and you're trying to overcome a no. I don't think with equity investors, you're trying to overcome a no. You're trying to give me a reason to get excited about giving a yes, right? And so that's important framing when it comes to pitching your startup. But the short answer is, yeah, the worse the environment, the better it is in terms of a time to invest. We'll talk probably more about this here in a little bit, but one of the issues with AgTech is the M&A landscape. So it's the light at the end of the tunnel for these entrepreneurs and the exit, as it's called. And so what that really means to me as an investor is my entry price, the price I'm paying when I invest in the startup, is absolutely critical. And so when it feels like it's a down market, as we've sort of discussed, like that's the best time to deploy capital as a venture capitalist. So really we started investing actually in August of 2021. And so we invested for 3 years kind of after that. And so the way I say it is we've been investing in the best climate of all time, because we kind of missed the bubble a little bit. And we've been investing at these more realistic and reasonable prices. But Chris absolutely nailed some of how we think about investing, which is problem is first in AgTech. It'll always be first. Solution is way down the list. And I think we're going to talk more about this later in the hour. But to me, solution's not first. It's not second, might not even be third. It's all about solving a real problem for producers, for agriculture in this case. But the short answer is yes. I think it's a great time to deploy capital. The macro ag scene is a little bit, ag goes in cycles, right? Very well-defined cycles. And right now, a lot of production agriculture is down. There's less cash on balance sheets and things like that. So I think that affects the customer behavior. But beyond that, I think it's a great time to invest in AgTech.
All right. So Yurii, what about you? What's your thought on that?
Well, to put it simply, the successful founders and people who'll be working with us and startup founders who never had to discuss money constraints and funding constraints, the company, they have 3 main things in common. The first one that the guys already mentioned, you need to have a really well-defined problem you're solving for your clients, and it should be a narrow niche. Specifically in AgTech, you cannot cater to the whole supply chain. You should cater to the very narrow niche. And when I'm talking narrow, I mean farmers or ag processors or someone else. The second kind of thing that we've seen a lot in successful founders, that they have very defined and clear business model. They know how they're gonna make money on it. They're gonna charge per acre. They're gonna charge per subscription. They're gonna charge per, I don't know, data set or whatever. But they know how they will commercialize it. And the third thing is team and technology. If they have a great team behind, if they have a technology behind, whether it's developed in-house or with a partner, doesn't really matter. It's whether the actual tangible thing you can look at, click through it, or use it. That's what makes a difference, I guess. And that's what founders need to, in my personal belief, need to look into.
So by Digital Ag Global standards, we have a flood of audience participation. We have one question and one shout out. But let's go to Christina. I'm not sure where Christina is based, but her question is, which ag tech domains, and I think she maybe means what kinds of technology, but even we could get into geography a bit or things like that, are likely to attract investor interest. So I think she's saying it's not just the quality of the opportunity, but also what areas have the greatest potential? Maybe we'll start with you, Ben.
Yeah, so there's a bunch of trends and issues that we're looking at, and we think there's three that perhaps are at the top of our list. We have one of our investors in our fund that's famous for saying labor is the number 1, 2, and 3 problem in agriculture right now, and it's going to continue to be for the next 5 years. I think that is obvious, and it's obvious to producers. So for us, it's solutions that are solving labor shortages and labor constraints in agriculture is a big one. Second, I will say a buzzword, and then I'll define why I don't mean it as a buzzword, which is sustainability. I don't actually mean sustainability in the traditional kind of ESG sense of the word. I mean sustainability in economic sustainability, operational sustainability, and yes, of course, environmental sustainability as well. Producers are starting to care a lot about those sorts of things. Most ag tech companies, you could argue, are sustainability companies. And then third for us, we call it trust and traceability, because traceability is another buzzword, but it's about sort of trust, transparency, traceability of the ag value chain. Those are 3 areas that are getting, that I think are going to be big trends in the next couple of years. There are some other big ones that a lot of the kind of non-ag tech venture money is chasing that I'll just shout out. One over the last couple of years has been kind of the environmental sustainability side of the world. And so the question was, what's going to attract investor interest? And I kind of answered what I care about, what I think matters. But you can have just kind of environmental sustainability that's attracting a lot of interest. That includes like biologicals. So replacing chemicals, there's literally thousands of biological companies starting up right now, not to even include the corporates that are playing in that space. So those are kind of one in the same, but 2 categories that are attracting a lot of investment interest at the moment as well.
Yeah. So, Chris, what's on your radar in terms of investment opportunities, in terms of the sectors, the ideas, the products?
Yeah, been nailed. I think the categories that are what we would consider hot in ag tech, labor and automation, ag robotics is a part of that, which is has attracted a lot of investment capital. That's going to be an interesting sector to watch the next couple of years. I think we're going to see some losers and winners in that sector because a lot of money has been deployed there. Biologics for sure, we're seeing that. There's this whole, on the production side, there's this whole movement called regenerative agriculture. It means different things to different people. There's a livestock growing component that we really like, but there's also conventional crops and organic transitions and a lot of different things. So the biologics is important there. One of the things that we like, and I know Ben likes it too, I think, is what I call back office solutions for farmers, helping them get more efficient, not necessarily at the growing aspect of what they do, but it just managing all the other processes involved with running a farm agribusiness. So contracts and vendor management and leases and accounting, that's a big one, and just the way they consume information and process information. So there's definitely some technological solutions and software solutions, including AI. AI is a big buzzword for everybody right now that can help with those processes. And I know companies like Yuri's help produce some of those solutions and help these companies develop those solutions. So that's what we like is getting farmers to be better business people is something that I'm really passionate about.
Well, I always think that it's important that everyone in this whole sector emphasize to people in farming that farming is a business first, a lifestyle second. Mm-hmm. Yurii, what are you working on these days?
I mean, I should agree with guys. Robotics gonna be big, and they are big right now. ESG solution, environmental, social, governmental. It's gonna be big because corporate need it, and they will look for startups that provide solutions that are related to this field. And also, I see that there's gonna be a lot of buzz, not only around AI, but also on a crossroad of AgTech and climate tech. So companies who develop sustainability solutions for farmers. You cannot buy or get more land in our world, so you need to make it sustainable. That's why it's going to be also on the radar. in upcoming years.
Right. Well, I'm in total agreement that Shoebox is no longer a very good accounting system. So I fully support those kinds of solutions. I would mention that we've got just a shout out from Abiodun from Nigeria, just saying, and he's involved in an organization called AgriQuest Africa, and it's great. I spent about 12 years working on some solutions for smallholder farmers in Africa. What about nascent markets? What about areas where, they don't have the massive John Deere equipment range and, and all its embedded technology and stuff like that? Is there an opportunity there that hasn't been seized?
Yeah, I mean, the short answer is absolutely. South America is another huge one. Of course, Africa as well. And a lot of that is, 10 years ago or 15 years ago in AgTech, you saw all these technologists that looked at ag as this antiquated industry that was ripe for adoption. And so then they tried to bring tech that was ubiquitous in other sectors to disrupt ag. And we could argue about whether that worked or didn't work. But now I think you see the same thing where you have technology that might already be adopted in production agriculture, both crop and animal production. And you're now seeing a market like Brazil that is it's a sort of a counter season to the US. And so it gives you less seasonality if you're an entrepreneur. But it's also a market that you can take technology that's already been adopted. You already understand the distribution model. You already understand the problem. And now you can simply kind of apply it to a new market. The same goes. Africa, of course, has the same application, although different in that, Clyde, as you mentioned, a lot of smallholder farms in Africa, where South America is very, very consolidated. So lots of big organizations. So two opportunities to create different solutions. Of course, it's difficult to raise money depending on where you are in the world, but I think you're going to see more kind of global thinking of entrepreneurs instead of just, I want to get into corn and soy in the US, for example. You're seeing a broader, although Yuri's right, talking about sort of a niche problem, you're going to see sort of a broader global, I think, mindset going forward.
I think you'd also see a lot of public-private partnership in that area. If it's done well, you can have the advantages of the private sector knowledge and background and maybe less of the downside of public investment. Chris?
Yeah, I mean, it's talk a little bit about Africa or India, those smallholder farms. There's kind of two directions that those developing countries can go. They can either maintain a more efficient smallholder farm and where there's more capital available and those smaller farmers can be profitable and produce great food, or they can find some economies of scale and grow, like as Ben said has happened in North and South America and in Eastern Europe for that matter. We've seen that. And for the smallholder farms, things that are challenging for them are credit solutions, and so there's some fintech financial technology companies that are providing that I think are very important. Or also anything kind of mobile digital solutions that help them become better farmers and realize more profit from the crops they grow on a small scale are important, getting those crops to market. And the other thing that's very true about Africa writ large, I spent a fair bit of time there, is lack of infrastructure and logistics channels to bring the food to market and get it safely in front of the consumers. So I think there's going to need to be some infrastructure investment as well in those countries.
And I also think that, and you mentioned, one of you mentioned fintech, any AgTech solutions that could aggregate large numbers of smallholders into more viable sized organizational systems, I think is a critical importance and a good opportunity. Yurii?
For sure. I mean, we've been looking at the African market for quite some time now. We've been in discussion with companies from Kenya, Nigeria, Tanzania, Egypt, and what we've seen, a huge popularity of agri-fintech solutions. Very simple, like credit-based buy now, pay later stuff, microcrediting for smallholder farmers, and stuff like that. That's super popular. Also, solution that helps to kind of create or provide access for a supply chain for smallholder farmers. So basically, marketplace solutions for smallholder farmers to sell their crop to outgrowers or local buyers or local market. That's on a race in Kenya and Nigeria, but we've also seen that some of the startups in Africa are getting traction. There is this company called, it's going to be a shout out for them. It's called Sun Culture. They provided smart irrigation devices for smallholder farmers. They raised a couple of months ago Series B around 20 million USD. So there are technology out there. There is a huge demand for it. There is some challenges like infrastructure and stuff like that, but it's gonna grow, and it's gonna be one of the, I guess, most interesting market in next 5-10 years. There are a lot of people and there are a lot of farmers, and a lot can be done there.
All right. So great discussion. I think we're going to have to shift, but I'm going to do just acknowledge Lucia, if I'm pronouncing that correctly, asking a question I think we've kind of already addressed about what innovations and solutions are needed to make digital agriculture more accessible to smallholder farmers. And I'd say, Yurii, this is a topic that I think we'll want to cover in detail in a future episode of Digital Ag Global. And then I just want to acknowledge, let's see, who have I missing here? Yeah, Srini, out of India, not sure where in India, it's a big country, but Srini is engaged in F&S scaling sustainable and safe produce business. So lots of opportunities we move up to, and I think Yurii and I would tend to agree that ag tech doesn't end at the farm, and it kind of goes through the whole supply chain. So let's talk a little bit about the entrepreneurs that are out there, and obviously they have an idea. They need capital to get that idea to market, but it's a pretty high hurdle, I think, as we've talked about, to get funding. It's other people's money, right? And so maybe I could get you to talk. Maybe I'll start with you, Chris. Maybe you could just talk about what are the things that you want to see from entrepreneurs when they knock on your door and say they've got a great idea and they'd like some funding.
Yeah, we talk a lot about traction, and traction can mean different things. Traction is do you have more than just an idea? So do you have that MVP, that minimum viable product that you put together, a prototype? Have you done in agriculture, kind of the holy grail of testing things is trials on farms, where you've actually put your solution out there in a production environment, not just a single small test case where you may have, it's hard, like any kind of solution where you're trying to gather data. You need to have multiple variables involved, and so proving your solution is important. Of course, we look at the founders. We like people that come from farming backgrounds because they understand the problem, but that's or at least to have a mix of those people on your team, where you might have some technology people and some farming people, ag people, and in a nice mix. And of course, I will always reiterate, business people that understand business. And so when we people come to us with their sort of early stage, and we do anywhere from that pre-seed all the way up to Series B offerings on the platform, that we do want to see that they actually know that their solution has some commercial viability. So their ability to sell is really important. So a lot of times you get technologists, which are really good on the technology side, but they don't understand how to sell their product or commercialize their product, market their product. And selling into the ag industry, as we know, can be challenging because it's a very conservative industry, and people like to use and a lot of times you have multi-generational farmers, and they will use the same products that their father and grandfather used, or the same seed distributor, or the same ag credit union. So trying to break into that market can be tough, even if your solution is excellent. So an understanding of how they're actually going to bring their product to market is key for us.
All right. Okay, and Ben, maybe what is it that you at Grit Road, and Grit Road sounds like you need some grit in your potential entrepreneurs.
Yeah, that's exactly where the name comes from. Chris nailed it. I'll use different words just to kind of say some of the same thing, which is three things that matter to us more than anything else is problem, business model, and distribution. And what I mean by those things is pretty much exactly what Chris said. Too many early back, 10, 15 years ago, early ag tech companies didn't really validate what's a problem and what's not a problem for the actual producer. Again, there was this mentality that you could just take ubiquitous tech and disrupt agriculture without asking the question of like, what problem are we solving? Does the producer, does the customer have the problem? Second, another thing that's sort of unique in agriculture is like a lot of times the people that have the problem can't pay for the solution. That goes back to the question we just talked about where Clyde hinted at a future episode. Like, you have to understand if the business model works with the ag value chain. There's all of these technologies at the farm gate that they want to sell to the individual farmer. The farmer can't pay for very many things. So how does the business model work with the ag value chain? And then third, and perhaps most importantly, as Chris ended with, is distribution. There's all of these distribution layers in agriculture that are unique that you don't see in other tech sectors. Think about every little category of agriculture, and there's distribution channels and layers that you have to figure out how you're going to really play nice with. A lot of companies that came from traditional venture hubs would just say, oh, we're going to disrupt the channel. We're going to get rid of it. We're going to digitize it. Turns out the farmer doesn't want that. So none of those really worked. And so those three things are critically important. And then like one we've hinted at throughout the last 42 minutes is like capital efficiency. If you think you're going to raise 5 rounds of capital and raise $100 million in ag tech, you're probably not. Some companies do, and I think that's generally a really bad idea for reasons I kind of mentioned previously as well. But it's also really hard and not common in ag tech. And so capital efficiency, thinking about scalability, and then like I would be remiss not to just say like at the end of the day, Chris, us, other angels, early stage investors invest in people first and foremost. They're investing in people and they're investing in teams, and that matters. It matters because of the other things I said. The good people we invest in usually do those other things that both Chris and I have sort of mentioned that we look for. So same answer said kind of a different way.
So trust is, as in a lot of business, trust is just essential. Yurii, just briefly, because we're a little tight, but could you just give me your thoughts on that?
No, the guys were spot on. I also believe that people who can show traceability and show that the actual result of their work are more likely to actually raise some money. So I guess it's not even about only proving your POC or MVP on a test field. It's also to onboard those early adopters and show to your investors there are people who want to buy that. The one of the most important questions you need to answer for yourself and for your future investors.
So we're coming up to the end. One thing I don't want to forget to do is to comment on Srini out of India. I did wonder where she was from. She is from Hyderabad in India. So a shout out to Srini there, who is, I think, probably pretty late at night if I've got my time zones right. So I think she's the digital ag global champion for today. Guys, we could go on, I think, a long time, and I think we're going to, make sure to get you guys back at some point in the future. Great discussion. One thing we like to do at the end is just like 30 seconds each. What's your hot take? What is something that people interested in this space should be looking out for? Chris?
Yeah, for us, it's put your money where your ideas are. So we have an opportunity to take a risk and invest in some of these early stage companies. So we hope that you do that.
All right, that's great, and I mean, this is essential to this sector that we have people that are willing to innovate and provide the opportunities for innovation. Ben?
Yeah, so I think as a general theme, what Chris said, I think we see momentum in ag tech right now. I think that's only growing. I think we're going to see a ton more deal flow. A very sort of spicy take, just to be provocative here. I will say, in my opinion, there's only been one ag tech unicorn ever. So a unicorn is a company that grows to $1 billion exit. And that was Climate Corporation in 2013. So over a decade ago, got acquired by Bayer Monsanto. Climate Corporation was built in Silicon Valley by a name that a lot of people recognize. David Friedberg has become sort of famous after the fact through podcasts and kind of the tech ecosystem. So my spicy take, hot take is we're going to see the second ag tech unicorn before the end of 2027. And it's going to be from somewhere that's not a traditional venture capital market.
So Yurii, let's invite Ben back in 2027. And
Exactly.
we could talk to him about. Well,
I'm calling the shot. I'm betting my career on that in some ways.
Oh,
So
you're okay. You could always have a job in AgTech anyway. So so that's great. I mean, but I think that is an indication that. But between that unicorn and disaster, there's a lot of opportunities there as well for other people. You don't have to raise $1 billion to be a success.
Yeah, just to be clear, we're investing in things that aren't going to sell for $1 billion on purpose. So don't let that be a deterrent. But
yeah, I understand. There's more big stuff to come. I get that.
Yep.
You usually close out the session. Do you have a few final thoughts?
Yeah, I mean, my message to founders, early stage scale ups, I strongly believe in proverbs that execution over idea. You can have the best idea in the world. If you cannot execute it, it doesn't worth anything. So probably someone somewhere in the world already working on the same idea as you are. It's just a matter who will do it better and who will do it faster. So make sure you have a great team who will support you and you will actually deliver what you trying to deliver to agri-food value chain. With this said, I think we should wrap up, and it was a great session today. I really enjoyed talking to Ben and Chris. Lovely insights, and I'm looking forward to 2027, see the next unicorn.
All right. So stay tuned to your channels that you're seeing this, whether it's LinkedIn or YouTube or wherever. More information coming on the next episode. And this was great. I had fun. Hope you guys had fun. Hope the audience seems engaged. We had, I think, 5 or 6 comments. Let's double that next time, and it'll be a tsunami. All right. Thanks very much, everybody, and have a good morning, afternoon, or evening.
Thanks, guys.
Then